Buy now, pay later. I'm sure anyone watching this video has heard the term before, or at least seen the advertisements online, or even at your local coffee shop. Instead of paying directly for a goods or service, buy now, pay later allows the customer to pay off the amount in smaller, regular payments. Buy now, pay later is one of the latest financial waves that has been taking the world by storm as companies expand into the fintech market across the world. Financial technology, or more commonly known as fintech, it is the technology and innovation that aims to compete with the traditional financial methods in the delivery of financial services. Buy now, pay later comes with many benefits. A few of these include convenience, fast and easy setup, interest-free terms, spread payment plans, and so on. How Buy Now Pay Later works is the service you are using offers a loan to you, the customer, and expects you to pay this off over a fixed time in regular increments. So if the product costs $100, the Buy Now Pay Later service will pay $94 for the item from the company. Then the customer will pay back the Buy Now Pay Later service $100. That way, you, the customer, get the item that might have been too expensive at the time. The Buy Now Pay Later service gets their $6 in profits, and the company of the goods and service gets the sale that they might not have been able to get if the customer couldn't pay for it at that time. But as the use of Buy Now Pay Later rises, will credit cards be the ones left behind? Yearly credit card numbers in the United States show that the yearly number of credit cards is rising, but with Buy Now Pay Later growing, younger generations are starting to shift the demographic. The majority of credit cards in the US are held by baby boomers, averaging around 4.6 credit cards per person. These types of numbers will not be replicated as generations continue, as having or carrying around this many cards will become a thing of the past. Having all the services easy and just on your phone will help continue the growth of these businesses over the coming years. Businesses are adopting this new wave as it benefits the seller potentially more than even the buyer. With the option of Buy Now Pay Later, customers are more likely to spend more money than they originally had in mind. So for the business, just this small option that they do not have to manage is helping attract more customers and convincing them to spend even more money.
People don't realize it, but the credit card industry itself, it's been reported that it actually costs low-cost income households in the US $70, and it transfers $700 into high-income households. It's one of the most effective redistributions of wealth that exists, and grown 5 times over credit in the last 10 years. And the pandemic has, further accelerated this. We've seen over $150 billion worth of credit card debt paid down, which is fantastic. People should be using debit cards instead of credit cards. But the problem is that occasionally they do need credit when they shop online or in specific situations, and that's where Buy Now Pay Later like Klarna services come in and solve for those situations. So we're very, very happy about that, and we think this is a very positive change.
Apple has also been working on a new service that will let customers pay for any Apple Pay purchase in installments over time. Created to rival the Buy Now Pay Later services such as Affirm, Afterpay, and PayPal, Apple has partnered with Goldman Sachs as the lender of the loans needed for the installment offerings. There will be different plan options available, with the first being known as Apple Pay in 4, which is when payments will be made across 4 interest-free payments made every 2 weeks. The longer payment plan will be across several months with interest known as the Apple Pay monthly installments. Users will have to submit an application via the iPhone Wallet app where they will be able to manage their payments.
So you'll be able to, when this eventually launches, sign up for this, like you said, Apple Pay Later service. And the way it'll work is you'll go to a store or make an online purchase, and let's say it's $100. And if you're part of this Apple Pay Later program, you'll have 2 options. One option will be called Apple Pay in 4. So what that'll allow you to do is split that $100 up into 4 no interest installments of $25, right? So you'll have to pay $25 4 times every 2 weeks. So it's an 8-week interest-free program. The other program is called Apple Pay monthly installments. This is a longer term program. If you make a sizable purchase, thousands of dollars that you want to pay for through Apple Pay over several months. In that case, Apple will charge interest in APR, and Goldman will be the one handling that and the lender for those scenarios as well.
Buy Now Pay Later does still come with some negatives. Impulse spending seems to be encouraged, as customers have complained that buy now, pay later services have led to people spending money they simply do not have and leading to debt. If you are struggling to stay on track with your payment, then this can lead to damage in your personal credit rating. Buy now, pay later services don't usually do credit checks for customers prior to accepting loans or signing up, but destroying your credit score can lead to issues in the future when you are trying to borrow money for a mortgage, a car loan, or even a credit card. Afterpay, another buy now, pay later platform, founded in 2015 in Sydney, Australia, that boasts 16.2 million active customers, majority found in Australia and New Zealand. Afterpay has gained popularity, in particularly amongst young people, and continues to grow as it has expanded into the UK, United States, and Canada. American giant Square have recently acquired Afterpay, resulting in the largest corporate takeover in Australian history, with the deal reportedly valued at around 39 billion Square stock.
We're so excited to talk about this transaction, which brings together two of the fastest growing fintech companies globally. Buy now, pay later is an incredibly attractive space going after a $10 trillion online payments industry, where we're about 2% penetrated today from a buy now, pay later perspective, but we're seeing those consumer sentiment shifts towards transparent borrowing opportunities like buy now, pay later, and with merchants who are looking for that omni-channel experience to serve buyers across channels, whether in person or online, through this means. And with Afterpay, we have the opportunity to strengthen and closely connect our seller ecosystem, which serves millions of merchants, and Cash App, which serves 70 million active consumers on an annual basis. Together, we can create an even more powerful commerce platform connecting the two.
Okay, let me go to Nick and Rita. Nick, why did you want to sell? The growth here was absolutely incredible. Why do you need to cash out now?
Yeah, look, thank you for having me. From our perspective, this all-stock deal, represents a huge excitement for us on the long-term, prospects. So, when you think about the merchant side of the equation with with Square's seller business, you have millions of retailers on one side, and you have 70 million annual active consumers on the Cash App side of the equation. So, to think about the inflection point of where we are in our growth curve right now, which, as you say, we're growing still very strongly off a really large base. It's an incredible opportunity for us to expand, particularly in the US, where we've only been for 3 years. But it's already contributing 50% of our total sales volume.
Purchases like this are helping push the needle and continue growing the buy now, pay later services. Banks are now adapting buy now, pay later, as they ensure to not fall behind. Banks such as Commonwealth and Westpac have emerged in the scene as they attempt to stay on track with the new fintech advancements. Buy now, pay later will only continue to grow as companies invest more and more money into this sector, as customers continue with these lavish spending patterns, and businesses such as Afterpay, Affirm, and Apple Pay will help build the future of fintech.